time now for this Disruptors. George Tsilis, senior markets correspondent, is here with today's company, which is ON Holdings, up after a Goldman Sachs price target hike. All right, George, set the record straight for us, though. Are you a Hoka's wearer, an ON wearer, or something else like Nike?
Let's just put it this way. All three brands exist in my household in some capacity. But look, I think if you look at ON Holdings, obviously this is a brand that's taking off when it comes to athletic wear. They actually have very, very nice outdoor activity, footwear, leisure wear. And the other thing is people are wearing from casual standpoints, but also from the lifestyle standpoint. And I think this is a very powerful brand that's taking a lot of market share away from Nike. And in fact, Hoka, which you mentioned previously also before the break, has been taking off. And I think Nike has been less innovative, and that's been the challenge for that company from the standpoint of their footwear, which is their primary business. And if you look at the price action just year to date, comparing the three, you can see that the trends are obviously moving away from Nike towards Decker's Hoka brand, as well as ON Holdings. Now, if you look at the call today by Goldman Sachs for ON Holdings, they actually maintain a buy rating on this name because it is still a growth stock, and they increased their target to $47 from $41. And I think what's happening here is after the stock moved higher in mid-May based on earnings, you're actually seeing a pullback from those highs based on what I suggest is a capital raise. And that's fine because the company is still growing its business overall. But I think their call is valuation because it is a growth stock trading really at a reasonable price, considering that the earnings estimates for this year have actually risen from 80 cents to 97 cents. This is based on last quarter's results and revision of guidance higher. And going into 2025, they've also increased their earnings target to $1.10. Now, both of those numbers are actually quite low, considering the EBITDA growth estimates, which are growing sequentially year over year, and on a forward basis, higher 3% in 2025 versus 2024. And it's around 46% earnings growth. And if you look at sales growth estimates, they're also expected to increase by about 3 to 4% compared to last year, at around 35%. So you're basically seeing, earnings growth around 45%, just give or take a percent or two, and the stock is trading at less than 1 times its growth rate, around 36 times forward earnings. So I think this call from Goldman is valuation, growth at a reasonable price valuation, plus their earnings growth and revenue continue to accelerate, not decelerate, and that's a very strong fundamental basis.
All right, growth at a reasonable price for a sneaker company that doesn't actually have cheap sneakers. I will say I'm due for a new pair, and they're $170 a pop. But Goldman thinks it can go to $47 a share. The median price target's $42. It's currently at $36.63. Walk us through an example trade for this name, given all of that.
Yeah, so if you look at the last 6 weeks, the stock has lost some momentum. And like I said, I suggest it's probably because of the capital raise. But if you look at the price action, the stock, at least in the last 6 months, seems to respect the 100-day moving average. So we can certainly see some additional softness. So you have to keep that in mind. So what we're going to do in this case is structure sort of a neutral to bullish trade. So it allows us flexibility 3 ways. The stock could pull back. It could also continue where it's at around the $36 area or go higher. So in this case, I'm going to go out to August with 44 days to expiration. I'm going to sell the $35 cash secured put. Now, earlier today, you could have sold that for about $1.75 a contract or a share, or $175 a contract. So effectively, by structuring this trade, that's your max profit, $175 a contract. But the stock could fall to 35, and you get to keep that profit, which is about 5% yield to strike in 44 days. But if you structure this trade, you have to be willing and able to take ownership of 100 shares per contract at 33 and a quarter, and that's your essentially cost basis price. So it allows us flexibility. So if you want to buy it lower, this is a trade you could consider. But also, if you want to harvest some yield as the stock sort of settles maybe to that 100-period moving average, this is also a trade that fits that same narrative.
So Wall Street largely bullish on this name, and we've found that there are the winners that can withstand a choosy consumer, and there are the losers that are feeling the impact of a consumer and not wanting to necessarily spend. But, how at risk do you think a company like ON Holdings would be if the consumer does continue to pull back?
Well, I think there's obviously risk if the consumers are pulling back, but I think the consumers who purchase their products or consumers aren't really price sensitive. And so there's a major cohort of folks that aren't price sensitive and haven't really been impacted by the effects of inflation. And so, generally those who can afford these products buy these products. And you're right, they are very expensive. They seem to have a resale price maintenance. In other words, they don't discount their products. They also allow customizable shoes now, and they're actually moving into apparel as well. So the higher end consumer, let's just put it in that regard, I don't think is too sensitive to challenging prices that ON is holding, because people will pay a premium for brands, and this is certainly an innovative brand that has become very popular.
I've bought more than 20 pairs of these and have never gotten a discount, but Oliver Rennick seems to find them at Nordstrom Rack at discounted prices. So he's the lucky one. George Tsilis, thanks so much.